to Stock Charts Trading. Today we're going to be talking about resistance, targets, where to exit the trade. So before you get into the trade, you'll know where you're going to take profits, where to get out, start reducing down some of your risk, look for new trades to get into. And it's like this, you'd never get into a car and just drive around aimlessly. No, you would go in, you'd get to the store, you'd go to work, you'd go pick up your kids. You would go with purpose and direction and a target of where you want to accomplish, and that's why you get in the car. Well, same thing with trading. You don't buy a stock and say, well, I'm going to just get in it and just let it go up. Like, so many people on Tesla, they're like, I'm going to just buy it and it's going to go to the moon or maybe even Mars. No, you have to have targets set in place before you put your money at risk. Know what you're risking, know how much potential profit you could make. I had a friend, he called me up and he was asking me about shop, and he bought down here at $350 and he was looking to take targets up here at $580, which would be a 65% return on his money. So I went to my trading charts, and whenever I'm looking at getting into a stock or the target on a stock, I always look at the farthest out time frame that I can, 20 years or an all chart, max. I'll even look at a week candlestick chart because I want to get the widest range, the most extreme outside points of it so that I can start making my resistance lines or support lines so that I know when this reaches this extreme reach to this point will be a very good place to take profits or enter into a trade. And so I looked at 20-year chart and I see that shop has a very high right here, right? And so I circled that up, and then it's a real tight range up. And then you have another high right here, which is a higher high with a pullback. And then it goes up into an extreme high. And then we had the pullback to where he was able to get into the trade. Now he's looking at taking profits at the last highs. And I really like this target, especially if you're doing like a short-term option. Why? Because price typically goes back to those highs, makes a double high, makes an equal high, might fall off a little bit, which would give you a cup and handle pattern. But then if it breaks through what we know, range box, and it goes to higher highs. So with all that in place, first thing I got to do, long-term range, look at what the candlesticks are telling me. Next thing, identify my higher highs. Now I'm going to draw a trend line based on those higher highs. So off these highs, I drew my trend line right around the top of there to get to this point. Right here, I told him to sell, which gave him another 15% from his target up into this resistance line. Price sold off a little bit, came back down to the 600 mark. And that was a perfect trade for him. He was so excited because he got 20% more than what he was anticipating just by looking at higher highs outside diagonal resistance. Now, as you can see, these purple highs, this was a high. It was a lower high than this high, but it was still a high. If I would have made a little bit tighter of a range here and used this high from this high, you would see it would price came right up into here, giving an extra 20% profit off of my target price. And I accept that this is not a perfect system, but it gives you a higher, more outside look of what's happening with the stock market. His target based on a horizontal support and resistance level, my target based on a long diagonal higher high system resistance line, or a very tight line also showing higher highs resistance line, giving them more profit. So each target giving an extra 20% based on your original investment. All right, here we're taking a look at VRTX, and this is back in 2012. We have a resistance, we have another resistance, we have another resistance, we have another resistance. And so we see that this would be basically all the places you would take profit. And now, where are the entry points? So if we look, we have a outside support line, another support, And this would be where you would enter into the trade. Now, again, this is 2012 resistance lines. And I just want to show you what 2012 resistance lines looks like in 2020. Because if you were to buy at this support at $70, where would you exit the trade? Would you just go back up to these highs at around $140, a double top maybe, and get out at $140, which is 100% profit, which is a great profit? Or would you be looking for some longer term growth to really stretch out your portfolio? Are you needing money right now so you can quit your job? Or are you trying to grow your money for retirement or other things? And I think that's kind of what we have to define and figure out where you need to put your targets, right? If you're looking for a long-term increase on stocks, just, mindlessly letting your money run to your targets and not having to worry about it on a day-to-day, month-to-month, week-to-week, because you have other residual income coming in, then great, this is the system for you. If you're looking for quick returns on options, which I trade every week, then this system also works, but of course you would use it on a smaller time frame. So here we are with the whole time frame to date. And again, this started back in 2012, this resistance line, drawing it up. And then we see that price was nowhere near the resistance line. It was almost like that resistance line was obsolete. And then here we are just now coming right into that resistance line, breaking through and even going higher, giving us 180% profit from a $70 entry level all the way up to $260. Now we're on NOW. NOW, again, we're on a 20-year, 2-day chart so that we can see the extremes. When I zoom into 2018, you can see that here's a high, here's another high, here's another high. And right now, where are we at? We're at this resistance line, making highs, bumping our head up against it. Now, here's the question is, how much is this thing going to move down off of that resistance line? So from this resistance, it came down to the bottom 28%. And now here, from this resistance, it came down 32%. Now, I do not think that we are going to go down 28 or 32% or on average 30% on this stock or any stocks for that matter. I am not looking for the market to make new lows or lower lows or even equal lows. I'm extremely bullish on the market. If you want to go back and look at our cycles, 17-year cycles, it's a great video to show that we're looking at some real long-term growth here. To me, we kind of look like this when we hit our head up against this resistance level, and then we floated up a little bit here, came back down. And for me, this is a nice consolidation right here. I believe that we're in this consolidation pattern right here. It might go a little bit higher, come a little bit lower, and just back and forth coming over across this 330 level. And basically we can use the exact same thing. We can use resistance lines and we can use support lines. We have a nice support right here. And so we can make that channel, which is basically the same duplication as this angle back over here. Price comes down into this channel and then what goes up to 500, which is a resistance level off the top of this channel, off of these highs here, showing that there is going to be some sell off at that 500 level, which gives us a 40% profit. And that's what I mean. I'm not going to get in right here at this $400 level because I cannot see the growth. I cannot see a target because I'm at the target, right? Buy low, sell high. So what do? We buy low at the bottom. We sell high at resistance. What did we talk about back here? Buy low at the bottom, sold high at the resistance. Buy low at the bottom, sell high at the resistance. We're talking about buying at support, the low, and selling high at the resistance. All right, here we are on LULU, Lululemon. And then you can see all the way back here in 2011, 2012, we have highs, and we could take those highs to these highs, carry it all the way across. And what happened right, boom, there, we have resistance. Resistance, resistance, no resistance in here for almost 10 years. And then we come up into what? Resistance. So we have a huge support line coming across at $40. You enter in somewhere around $40, maybe off this bounce, maybe off this, you're thinking this is a head and shoulders, maybe off of this bounce over here. You're looking for a target, and you can see that these old highs here are at about $80, and you think that's the perfect trade. I get in at $40 and I get out at $80, making 100% profit. But now what? You have to go look for another trade. You have to go look for something else at the bottom to go up to the top. But what if you just sold 10% at that high and you said, I'm going to take some of my profits off, 25%? What if you sold a little bit and then said, man, I heard this crazy guy on YouTube talk about highs and resistance lines. And I know it seems far-fetched, but I've got this target all the way up here at $240. Let's see. I mean, the market is made to increase. The market is made to go up. Nobody says, let's start an IPO so that our stock will totally tank and we make no money. No, everybody wants to build something, increase the value. And that's what the stock market is doing, increasing the value of the companies based off their performance levels. So what do we want to do? We want to give them room to grow, but there's so much technical analysis behind what happens. What are these candlesticks telling us? At resistance, the market sells off. Why? Because it's a high and people know buy low, sell high. At resistance levels, you sell. You have targets. What did price do after that? It went up a little bit and then dropped. So what do? You look and you say, there's support. Oh, there's support. Oh my gosh, seems like that's support. Boom. Yes, that's definitely support. We've got multiple places where this is touching support. We have our diagonal resistance line. We buy at $140. But now what? I could do my first target at $260, which is a great target, or I could take from my last highs down to my last lower highs, showing that I'm in an uptrend. I can put that into an extension, and voila, we're at that price right now, which is up in the $300, which gives me an extra profit of 10%. Doing the same exact trade, just looking a little differently at my target. Here we are on HUM. We have resistance. We have another resistance. And right now, look where we're at. We're at resistance. And we talked about buying this support level on this megaphone pattern. And so we were already saying if you buy here, your target is up here at the top of this megaphone pattern around $210. We were talking about buying this support right here on this megaphone pattern at $200, which gave you a target we already decided was up in this 410 range against resistance, which is 100% profit. You know what your profit is going to be based off of your targets. You know where to enter the trade because of your support. So now know where to exit the trade based off your resistance line. Take a broader look at a 20-year 2-day, a 20-year 1 week. Just spread your mind out to see where's this thing traded before. Here we are on FTNT, and you can see we kind of have this consolidation going sideways, and then we have this straight up. And again, I got a high right here, I got a lower high, and it came into this price right here. It's pulling off. Let's take a closer look. Also, we have a high right here. We have a higher high, which gives us that same angle into this 150 area. So high, draw our line. Shows us where resistance target is. We have another high, draw our resistance line. It shows where the target is right here in this $150 range. So you're entering into this trade based off of these support levels. Why would you not get out of the trade based off of the resistance levels? And again, it's 100% profit, right? You get in around this 75, maybe even 80 level, and you're getting out right around this $150 level. 100% profit. You know this before you enter into the trade based on support, resistance, trend lines. All right, here we are again. This time, I'm going to change it up a little bit. We're on DPZ. Z. And we are on a 1 year, 1 day chart. And this is what most people are trading, and they're trying to figure out where their entry points are and where their exit points are. And my question is, like, would you have seen this based on a 1 year chart to get in here? Now, we would all think, oh, of course I saw that. I know exactly my support and resistance, right? So you got a low here, another low. Here comes your lowest low. You enter into the trade. Hey, great. Man, you're brilliant. I just don't want to make $100, $200, $1,000, $2,000, or $10,000 investment based off 2 months, unless I'm only trading it for 1 week, 2 weeks, right? If I'm getting in at the arrow and my target is, right here, maybe I might use this as a time frame. But for me, where's my target now? I don't know where from this point I could do a target. Now, I could say, based on my old highs, here we'd come across here. So I would enter into the trade around this 220 mark, and then I would get out of the trade at around $280. And again, that gives you a nice, 30% profit or so. But is that what you're trying to trade for? Are you trying to trade for 30% profit in a year? Are you trying to trade for 8% of profit a year? And at 30% of profit, that is a great trade because you will multiply your money nicely. But let me show you what I'm talking about, the difference of things. Now I'm on a 20-year chart. Well, doesn't this picture look better to you? You can kind of see where all the outside resistance and support areas are on 20 years, which gives you like this bird's eye view. It doesn't give you the anxiety of, oh, I got to get in right now. It gives you time to breathe and think and make a correct trading plan of, I'm going to get in here and I'm only going to take trades that show me I'm off my resistance level of 100%, right? If you're looking to make 20%, then fine. If your resistance level is at 20%, great. Buy low, sell high, 20% away from where you're at right now to get that 20% mark. But if you're thinking, I want to buy low and I want 100%, 200%, 500% profit, then I need to make sure that my plan of that big increase meets what the charts are saying. I think that's a lot of the problem is we're always saying, oh, I'm going to become a millionaire in the market. But then we're taking all these little trades and those percentages aren't adding up because the percentages are small, but the losses are big. And so my thing is have small losses, big profits based on this support and resistance areas on a spread out playing field. I like to start out where I'm at, like where am I at right now, and then work my way backwards. Here is my highest high. Where was my last highest high? Oh, here was my highest high before that. Oh, there's another highest high before that. Here's another one. And just kind of keep on going down the road backwards. If I was dropping a marble off the top, where would it bounce? Where would it go? What would it look like? Now, starting off my high, going back to my last high, I just kind of draw that line in and let it bounce and just keep on going down like that marble to see where it's going to land. And boom, we come back into this high over here. And this doesn't really matter to me because, again, I'm focusing on highs for resistance levels. Based on this bird's eye view of this 20-year chart, right here against resistance, would you enter a trade? Would you put $370 a share into this trade? And what are you thinking? Where's your target? Are you thinking you're going to go up 100% from right here? And most likely it's going to go down to 300. It's going to lose about 20%. And then we're going to say trading doesn't work. Because look what happened last time we hit up against this resistance level, right? We fell off from this $270, almost $300, down to $200. We lost 100 points off of this resistance level. And that's what happens for most traders who don't know what's going on because they're looking at such a small chart. Here we are on Clorox CLX. We have a resistance level. We have another resistance level. We have another resistance high, and then nothing right into where we were at right now. And because we're savvy traders, we see that this is a high. We see that this is a low. We see that we have another low over here. So what are we thinking, right? We're thinking that this is resistance on a horizontal level. Here's support, and we have more support. And so we're thinking we like this support resistance level at around $110. And now we're seeing that this target area up here, what if we just use this $110, and we thought, well, from this angle, it looks like a 35-degree angle, and so that takes us up into 180. Well, now we're looking at a 60%, right? We didn't quite know that it was going to consolidate right in here and then go up, giving us almost 100% profit. Maybe we just thought that price would kind of come up on this 35-degree angle area right here, boom, give us an 80% profit in a year or two, and then we would be able to take our profits and look for another trade. But instead, right, this thing consolidates, and what are we doing? We're, what are we? It's going to lose. I'm going to lose. Oh my God, it's not going to the top. It's not going to the bottom. What am I going to do? What am I going to do? And for me, only put in the amount of money that you do not need to over emotional your trades, right? I mean, if it's not at your target, but it's not under where you got in, be patient with it. Let it work out. Etsy for me took almost 3 years. I got in 50% off on Etsy as an IPO, and it took me 3 years, not just to get back to where I entered into the trade, but to get to where my target was. But I didn't need the money to pay for my bill. I didn't need the money to take my girl out to a restaurant. I didn't need the money for my kid to get braces, right? It was money I was already allotting to the stock market to grow. And sometimes trees take a long time to grow, right? Sometimes you can go out and you can plant a tomato plant and it takes a week, 2 weeks, a month. But then if you want to get a bigger tree, right? You can't just grow a peach tree in a year. No, it takes many years for that peach tree to start manifesting that fruit for you. Well, it's also true with the stock market. We can do our technical analysis and see our support and resistance levels and say, man, based on what I think it should do, it should only take me a year or a month, right? And what we'd basically be looking at is this last time the market moved. The market moved right here, and it had a great uptrend. And so we would be anticipating, well, it had a great uptrend, and now we did this consolidation here, so we should have a huge uptrend into this resistance level. And then what happens? Trading, right? But what are we seeing? The market ended up doing what we thought it was going to do based off the technical analysis of support and resistance. It is the way to enter a trade. It is the way to exit a trade. Buy low at support, sell high at resistance. You gotta know your trade before you enter. Know where you're buying, how much profit you're gonna get out of each trade. Until next time.